All right, hey everybody, TG Watkins here. Good morning, good morning. It is March 19th when we're recording this, and it is FOMC day. So we should see what kind of craziness we get later this afternoon, because we know that it's usually a little bit crazy once Jerome Powell starts speaking, and then once he starts doing his Q&A. Thank you, Sunny. Let me know that the room audio is doing well. Also, everybody out there on social media, we've got X, Facebook, YouTube, and all that kind of stuff. And we see the eyeballs starting to roll on in. And just to let you guys know, I'm sure you've probably been seeing some of the advertising. We've got so next Wednesday, a week from today, March 26th, I've got a webinar that I'm going to be going over, showing you guys some of the trades that we've been taking, how it's been working, what's been going on with this market, kind of some of the updated news, and where I think we might be going in this market. And then also to warm everybody up about the class that I'm going to be teaching, the OG Moxy system training class that I haven't taught for 4 years. It's been a long time, and I figured it's due for an update. So we're going to be doing that. I know 4 years has been a long time. There's been a lot of people who have learned about me over the course of those years, and so I wanted to make sure that everybody had the opportunity to learn the new class with fresh examples. Okay, so register here. It's going to be simplertrading.com/duel. And then as we come into here, looking at what's been happening with the market, the Moxy room, everybody in there, you guys kind of know what's been going on, what's been happening, and since we've been keeping up in touch. But I was looking around, and I wanted to show everybody else on the social medias kind of what I've been seeing. I've been saying that these semiconductors, amazingly, have actually been leading the way as far as this turnaround. What we started to see last week was not only did, and I'll show SOXX and SMH because that's doing better, but not only did it make a higher low here, it actually started to get over the hourly 50 sooner by about a day than some of the other indices like FNGA and the SPX and all that kind of stuff. And so it was demonstrating relative strength. And even though we've seen a pullback just a couple days ago, since the market did come up here and hit some resistance, which totally makes sense, the pullback here actually looks pretty darn good. It didn't go down that far. In fact, it is staying above the hourly 50, and it should be getting probably over the 15-minute 50, I would imagine, either later today if the market decides to go up. And again, anything happened with Jerome Powell, we don't know if we're going to, he could say something and crunch the market. That's always possible. But generally speaking, I'm looking for these patterns to resolve to the upside. And so I want to see price get over the 15-minute 50, and I want to see price hold the hourly 50. And I'm kind of targeting the hourly 200. It's going to take some time. It's probably going to be a bumpy road, but that's where I have my eyes focused. And so if we look at the SMH and SP, good job for also kind of detecting that and looking at these things. You can see here that we did a pretty nice inverse head and shoulders right there on the hourly chart. And you can see how price basically was doing pretty well up in here and then had a nice big move to the upside. And look at the pullback. It's been very shallow. So here's the pullback that we've been seeing from yesterday into today. Very shallow. I mean, look at the gap here between price and the hourly 50. So again, I kind of look at that as relative strength, because if we compare that to the S&P, you can see here that the S&P had to pull back exactly to the hourly 50. So, had to go a little bit further and come down a little bit harder. And we can even look at the FNGA, which also had relative strength, because it put in a higher low, like right here, higher low compared to the S&P putting a lower low. It also pulled back to about the hourly 50. So it's nice to see that it's kind of recovering today. Kind of been making some jokes that maybe the FOMC report already got leaked, since the market actually was up today. Usually on FOMC days, the market's pretty dull and not much happens. But yeah, kind of making some jokes about that, seeing if we're going to be doing well. And again, if the market's going to recover to the upside, which I think it should, because we had 3 weeks of the market going straight down, no bounces, at least none on the daily chart. And then we finally got oversold, and there was the capitulation right there. That was I forget which day that was, but right there, that's the capitulation day. Big volume. You can see that with the FNGA, right there. That was the big volume right there, and that was the low of the market. And from there, we're starting to work our way back up. But it's a process. Unless it's a huge short squeeze, it usually doesn't just go straight up. It has to recover. We've got to stop the bleeding, and then we bounce, and then we have to kind of regroup. And then I want to see if we start to make our way higher. And there could be a couple phases that this happens. Again, my first thing I'm looking at is the daily 21. We'll see where that kind of takes us and how the market and price reacts to that. And we come up, maybe get a big pullback and then go, or we come up a little bit and then we go even more. And really that's what I want to see as the next step, is something around like the daily 50, hourly 200, something in that range. It depends on how much time this takes and where this wants to go and all that kind of. So yeah. Hey, Loco no Joko, man, good to see you. Yeah. Man, you're always excited, so that's great. I love the support. So that's kind of what I'm looking at. This market is wildly oversold, and I think we have finally kind of caught the low. Of course, anything can happen out there, but I really think that we should start looking for some sort of bounce. Remember, we do have seasonality on our side and through here. We had February weakness seasonality. The second half of February was the weakest of the year. And I need to turn that on to pause. Let me do that again. Let's see, pause for 30 minutes. Okay. So second half of February is the weakest for seasonality, but then March, the second half of March is the strongest. And I'm kind of leaning towards that, even though I kind of think that this is going to ultimately be a bounce and a downtrend, it will still fit the data for second half of March being very, very strong. Because if we do happen to get a rally back up to here, the second half of March happens to be so strong, usually because February is so weak. I mean, that's just kind of how the market works. The kind of like the more you go down, the more you come back up. And so if February is the weakest, then maybe March is the strongest, simply because of the dip, the correction, the pullback effect. And so that's kind of why I'm looking at this, and it sure seems to me that this is going to work out in that way. So we've taken a few trades. We have FNGA, we have Tesla, we have two types of SPX trades. And for those of you who've been watching me out on the social medias with YouTube and X and kind of any of the videos that I've been putting out, you guys know that I've been saying, hey, probably the safer or the more reliable way to be trading something to the upside like this with options is to be selling puts. Sell puts, sell put credit spreads, something like that, that if this market happens to be weaker and we don't really get a quick move to the upside, we kind of get all this kind of noise and we kind of finally make our way up like that. Selling puts or selling premium would really work out well, because the VIX is very high. I think we went up to about 30, and now we can see the VIX starting to come back down. And that's going to help. That's going to make that premium shrink. And that's what we want if we're going to be selling it. If you're buying calls in this situation, also probably doing a spread would be good, because if you can get your spread calibrated correctly, the one over top is going to be losing value, and that's good. That's going to help offset everything else you need. And the one that you want to go up, hopefully it's in the money, and hopefully you buy enough time, because even if the market's going to be kind of squiggly like this, you want to make sure that that theta doesn't work too far against you. So I'm thinking you either need to stay really short term and kind of almost day trade, maybe like 1 or 2 day trade if you're going to be doing long calls. But if you're going to be doing a short, like selling premium type thing, hey, that's going to work out much better, because you can handle any kind of movement in the market, and it's going to work for you as long as you're just selling premium, especially with the VIX so high and coming on down. So we are primarily doing that. And then I did throw on a cheap call debit spread to take care of anything to the upside. Yeah, Chris, VIX is the fear index, basically. Yeah, it's a kind of a measure of how many puts are being bought and what people are expecting, because when you start getting volatility and fear, people are starting to buy puts, and this is all starting to go up. And the market makers also have to account for bigger moves. I mean, ever since this started, each day in the SPX we're seeing big moves. And so the market makers have to account for that with inflated premium sizes, premium values as far as option goes. And that's what the VIX is doing as well. So yeah, you can see this thing was steadily moving to the upside as the market was moving down. But we perfectly nailed the turnaround on the VIX, on the UVIX, which helped us figure out that the market was ready to move higher. And so I made a couple posts on there. It's on my X. I'm going to be including that in the webinar that we have on the 26th, which speaking of, since we got more people here, I want to make sure you guys out there on the social medias see this. If you go to simplertrading.com/duel, I'm going to be doing a webinar next Wednesday, March 26th, about how we're finding some of these trades, how we caught the bottom of this particular move, and how we were doing pretty well with the whole market leading up to basically this turnaround. From I think it was August to call it the new year, I was able to more than double my stock trading account because the market was doing fantastically. I mean, it was great. Interest rates were coming down, market was doing well, small caps were doing well. I mean, we were seeing things move 100 to 200%, and we were capturing that with stock. So I can show you what a great market looks like, and then how everything started to turn. And to protect ourselves, we actually went into cash, which was a great decision. Now that I've been doing this for a couple decades, I am way more experienced and sensitive to figuring out when the market is suddenly not doing what it should be doing, and just stepping aside. Yeah, Emil. So as far as FOMC, sometimes the market reverses the day after, and sometimes that reversal is positive, sometimes that reversal is negative. But yes, the kind of the secret to the FOMC day is the next day. So whatever kind of happens today may or may not be the true move. A lot of times it's the day after. So we shall see about that. Other than that, I think everyone knows that gold has been the conversation. It's been one of the best performing assets since I think 2024. Yeah, 2024. So obviously that's been doing great. And what I can show you over here is the signal. And we talked about this back in the day. I'm not really one to trade gold, although trading I think it was UGL. I think that's the leveraged gold ETF. Would have been a pretty nice penny in through here, But I can show you what the signal was that this thing was about ready to take off. Not even using the Moxy indicator, but really just using price. So you can see here that there was resistance, pretty big area where price just could not get through. But then if you look right here, you had 3 to 4 months of candles that were actually staying above the previous resistance trend line. And I was telling you, like, it was ready to go. They were not selling into it, unlike before. Every time it came up, got sold, got sold, got sold. And then you notice that there's a change. 3 or 4 months where price is staying up here and just hanging out and doing well. And that was a very, very strong bull flag. And you see it continued to hold the moving average on the monthly chart, and boom, up it went. So yeah, pretty good. And even the nice moves here, pull back into the 21, 21, 21. It's been doing really, really well on the weekly chart. So with that, and I got to say, Trader B in the room here, in the Moxy room, kind of gave me a little bit of an idea. I do watch GDX. Sometimes I trade in the past, but then the whole idea about Trump coming in, energy rates going down, the cost of oil, cost of energy going down. It's like, yeah, you factor that in and you think about, okay, gold is up. And so you would think the gold miners should be up. And they were kind of moving around for a while. You can see here that they were going up and through here, but then it got a big pullback. And so you're still wondering, is this going to go? Are we going to have a nice move on GDX and the gold miners? Well, then you start thinking, okay, if the cost of energy is going to go down, cost of oil and electricity, all that kind of stuff, that is one of the biggest expenses for gold miners. You have to fill up the trucks, the giant trucks, the excavators, and then you have to pay for all the electricity to run the factory with all the conveyor belts and the grinders and choppers and crushers and everything else that's involved. I mean, that you are using just a ton of energy to extract this gold from the earth. And so if your input cost goes down, then your numbers, your dollars do better. Your company does better. And so that's why we started looking more closely at this. And I tell you, we got a great entry right there on GDX. And we decided to use the leverage ETF, so GDXU. And so I think we're up about 25% on that one. And this looks like the start of a pretty good new healthy trend. And so we're in that. And that's my way of playing the gold space. And so hopefully GDX actually starts playing catch up to gold itself because of the whole energy situation. So that would be really nice to see. And that's one of our healthy positions in through there. Beyond that, I am seeing that a fair amount of stocks, ETFs, you name it out there, that I am seeing that we should be in a bottoming pattern, because I am starting to see similar patterns across the board. Again, not going to be super easy, a little bit messy, but generally speaking, what I'm starting to see are prices of tickers starting to get over their hourly 50s, and their hourly 50s are starting to move up, and we see the Moxie indicator over zero or starting to cross over zero. So this is telling me that, at least for now, I think that the low of the market is in, and now it's really just a question of how much high side, how much upside do we have? Okay, and so that's why I'm leaning to the long side. We have a few trades on. I didn't really want to play too many reversals. As far as reversals like this that come off of the big pullback, and I'm looking for a bounce. We're pretty much playing the FANG stocks, and then we're playing Tesla. Tesla's kind of having its own thing, but it is up today, so that's good. Basically did a double bottom. And remember, Moxy crew, remember, this part of stuff that I'm going to be teaching April 5th, but you guys are in the Moxy room, and so we talk about this every day. Here you go. I think this is going to be proving what I'm showing, and I even discussed this a few days ago. Like, that's the whole point of what I'm starting to talk about with this, is that when you understand the Moxy system, it's consistent, it's repeatable, and I can tell you what you want to pay attention to, so that you can start observing it before it even happens. So what you're looking for is verification of, like, hey, I think this should happen. And if it starts to happen that way, then you're like, good, I'm getting confirmed, and you can be a step ahead of the market. And that's why when Tesla was down over the last 2 days, I said, hey, watch for the Moxie indicator on the daily chart to actually continue to go in green. And that's going to help demonstrate some of our positive divergence that will keep us in the trade and actually tell us, hey, just hang on. It's probably just a pullback, it's testing some support, and it should continue to work out. So I think that's going to continue to work. Maybe today we get a price trigger on the hourly Moxie. I'm sure it depends on how the market's going to go for the rest of the day. If not today, maybe tomorrow. And then the other thing is to watch this 15-minute Moxie indicator here. You can see that on the last move here, the Moxie indicator was kind of spread. So, okay, it was up, it was good, had a move, but that wasn't the move because the indicator wasn't super tight. Okay. And notice that we didn't get a squeeze, a Moxie indicator squeeze. We got it here. So these are the things that we need to start paying attention to. And you can see that if this actually continues to work and move well, that what we're seeing is the Moxie indicator on the 15-minute time frame very, very tight, which is good. And you can see we have what I call the power dots, but basically it's the squeeze for the Moxie indicator. And that's starting to show up also at the same time that price is starting to move up. So I'm happy with what we're seeing. I think we just need to be patient with this. The market is taking a lot of time to recover. I think a lot of damage has been done, and people need to change their gears, basically. We need to prove to the bears that they are no longer in control, and the bulls need to start stepping up. And when we have the combination, also we have FOMC today. I think everybody's kind of waiting for that, and then we have triple witching on Friday. So we kind of got a couple things that are just kind of keep making the market take its time. So let's see. Chris Bretcher was talking about IWM, and yeah, I mean, look at IWM. That we even talked about this yesterday, and I said actually IWM was looking fairly strong compared to the rest of the market. Because look at this, you see how IWM actually stayed above the hourly 50 compared to FNGU, which is at or just below the hourly 50, and the S&P, which is at and just below the hourly 50. So you kind of look at this and say, oh yeah, relative strength. Now, I'm not super interested in playing, say, IWM or kind of some small cap names. I'm interested in just being a little bit on the safer side, playing the things that I think are going to move the way that I'm expecting them to move. And I really don't want to have to deal with too many challenges. And part of what I'm saying with that is if I look at Reddit, this is what I mean. So I feel like me in the past, I would have gone after Reddit, be like, oh, it's a big name, and the market's going to go up and everything's going to go up. And I look at this and I would have been probably surprised and also disappointed, thinking that, okay, there's the recovery. I'm going to buy in here. I'm going to be early. This is going to come up and it's just going to go up like that. And then surprise, it perfectly gets rejected by the hourly 50, kind of like Tesla did too, right? And so now perhaps this is why when I talk to you guys in the Moxy room, I talk about the first move versus the second move. A lot of times I don't want to be the first one in. And so I think something like Reddit, if I were the first one in, yeah, man, I'd have to account for this. I'd have to give a bigger stop. I'd have to really give some wiggle room for this to handle all this. If I do the second move and just kind of wait a little bit, oh, well, now this might actually be the better setup. wait a little bit. You can see double bottom. We're starting to get some positive divergence. And I would even say, let's wait a little bit further. This might be the low, but let's wait until we really get a clean setup on the 15-minute time frame. It's possibly there. Just like I told you with Tesla, here's our divergence. Might be getting tight on the 15-minute Moxy indicator, all that kind of stuff. But yeah, that's why I didn't want to get too early, and that's why I'm not super interested in trading a bunch of names just for what I think is going to be a kind of a rebound. So I'm more interested in putting more money into fewer stocks as opposed to spreading it around. Like when the market was doing great, we were trading 20, 25 names, and it was fantastic. But now that this has kind of changed and we're in this kind of muck, I'm like, nope, you just stay focused on a few things because there's a lot of movement and you don't have to manage a ton of positions when the market's all over the place. Jay Washington, do I think the IWM will drop after Powell speaks? Well, first of all, I don't know. Anything can happen. What I want to happen is I want the market to continue to recover and move up. So if you're wondering if it's going to go down because maybe you can catch a dip, probably not going to happen. If you think it's going to go down because you're worried about what Jerome Powell is going to say, I don't know, but I hope not, because I think that this whole market has been sold into so hard for 3 solid weeks. I just think we're at a technical area where the market's going to start looking to rebound. Plus, we have seasonality in our favor for the bull side. And that's kind of what I'm leaning towards. I'm leaning towards these things starting to recover and move up. And hopefully Jerome Powell at least speaks softly. What color tie does he need? Is it purple? Is it purple? Is it blue, red, purple that he has to wear? We should probably look that up and we'll see we'll see what kind of tie he comes out and wears. But I think that as long as he speaks gently, which I think he would, because I don't think there's any reason for him to be hawkish. I think he's looking at what Trump is doing. I think he's looking at Doge. I think he's seeing kind of what's happening out there, and the market is telling him, like, look, it's a little rough out there, and we don't need to worry about inflation. I don't think inflation is going to be a thing. I know everyone's talking about it's still a little bit high and all that kind of stuff. I don't think it's going to be a thing. So I don't think we need to worry about raising interest rates. If anything, we're going to keep interest rates or we're going to lower them at some point, which is exactly what I'm sure Trump wants. And whether Trump is engineering this market, whatever, in order to get that, or this is just a byproduct of Doge and shrinking things and doing this and doing that, I think it's just all going to be tied together. So yeah, I don't see interest rates moving up, and so I don't see him being hawkish. And I think any kind of softness is probably going to be welcomed by the market, and hopefully that'll continue to grease the wheels of this market rebound to the upside. So, all right, I see that there's still a bunch of names in here. In fact, there are even more than there was a minute ago. Since we're getting closer and closer to the day, I just want you guys to know out there on the social medias that Wednesday, March 26th, which is next week, I'm going to be doing a webinar talking to you guys about the trades we've been taking, how things were looking in the market, where we're going to be going from now, how we can be taking advantage of that, and basically how I swing trade and I day trade for situations like this. Because when the market was doing great, hey, lots of swing trading, we're trading all sorts of stock, doubled my stock account in 4 or 5 months. And then when the the stuff hit the fan, basically I switched over to, we went to cash, and I switched over to day trading primarily while this thing went down. We caught some really good trades in through there. I remember one of them, we got 100% and 150% on Friday and then into Monday. And then I think we've got a couple option trades right now that should be working actually pretty well now that the market's kind of up today. And then we're taking just a handful of swing trades as I think that the market's going to be bouncing up. So showing you guys how I do both and where I think we're going to be going to the market. Plus on April 5th, I'm going to be teaching the Moxy class. So it's been 4+ years since I've taught this thing. If you guys have never taken the class or don't know much about Moxy or kind of interested in my trading style, this is the class to come into. I'm updating it so that we have current examples and basically even adding all the stuff that I've learned from even the last 4 years of being here at Simpler and rubbing shoulders with the other professional traders. So this is going to be a good class for you guys. Nice refresher and everything else like that. And for anybody who's never taken it, man, this is the time. Because if you guys have never taken anything Moxy related, this will get you up to speed. Okay. So I'm going to be pretty much ending on that note. If we look at this again, I think the price looks like it's continuing up. That's fantastic. Usually FOMC days are pretty quiet, but I think the market is just going through its paces. Big move down, flush out, 10% correction. We're starting to see a recovery. Today is an up day. I like that. And my hope, my opinion is that Jerome Powell is not going to say anything to derail this. And I think that we should continue to see the market move upward. And I think it should be nice, which is good because I'm leaving tomorrow and Friday to go to a bachelor party. And so I hope the market is going to be doing well for us. It would be nice to be on autopilot for that. Okay, fingers crossed. Hope don't jinx it. And for those of you in the Moxy room, I'm going to be back on the mic at 11 o'clock my time, 1 o'clock Central. I think that's in about 2 hours. So we will see.